Hello friends, how are you? So last session we have seen an introductory part of funds flow statement. I hope you remember what I said in that video. Now we'll have to see the next step. I already told you there are three steps. One is that statement of changes in working capital. Second, funds from operations. Third, preparation of funds flow statement. Long-term sources, long-term uses. Okay, so this is what you are going to see. First, we will see that statement of changes in working capital. It's a very simple thing. There's nothing too hard or difficult to understand. So, only thing is you should know what is the current assets, what is the current liabilities. I already told you in the last first session, what is current asset, what is current liability. Where if you classify it correctly, this problem is very easy. This part of the problem is very easy. You should know how to classify it, which is current asset, which is non-current asset. Okay, accordingly you can classify it. So I written the one problem there. Let us see how it works. Okay. So before that, we will see the short term. This is short term. Current, I already told you, no, this is current account, short term in nature. So there are two things are there. One is sources and uses. Sources and uses. The increase in borrowings, source. What is source? Inflow. Use, outflow. Simple thing. Simple. You will understand this. So increase in borrowings, source. Decrease in borrowings, you are paying, so outflow. Increase in other current liabilities, okay, naturally, Syndicator, they are giving credit to you. So there will be increase in short sources, it is a source. Decrease in other current liabilities, you are paying your creditors, okay, then it is outflow. The increase in inventory, purchase, it's a decrease in inventory, it is a source because you are selling and getting cash. Increase in inventory, you are purchasing, so cash is going out. In decrease in book debt, your customers are paying, cash is coming in sources. Increase in book debt is just opposite use. Likewise, decrease in other current assets, source, increase in other current assets, you are purchasing other current assets. So it naturally uses. So these are the things you have to keep in mind. So let us see what is current assets, what is current liabilities. We can just classify it first. Then we can we'll put the table column. You can total it up and you will find out. Okay. So this is Syndicator's current liabilities. Okay. Got the point? Current liabilities. Then book dates, current assets. Bills receivable, current assets. Bills payable, current liabilities. Okay. You have to pay. Bills payable. All what is current liability? Current liability is one which can be paid within a period of 1 year. What is current assets? It can be encashed within a period of one operating cycle or within a 1 year. So this is a short term in nature. Okay. So now we'll have to just find out. Then prepaid expenses, current assets. Outstanding expenses, current liabilities. Got the point. Stocks, current asset. Okay, investment current asset, security, government security, it is short-term nature. We presume that it is encashable within a period of 1 year. It is short-term in nature, so it is current asset. Current asset. Okay. So now we'll have to just list it out. We'll total it up, then find out how we can proceed. So let us see. December 23. Okay. Then December 22. Okay. What is current assets? We'll take only current assets. We'll total it up. Then, okay. This is December 23. Current assets. 1,50,000. Okay. 1,50,000. Book dates. So book dates, we put BD. Okay. So you need not put, okay, book dates. So 1,50,000. Sorry. 1,50,000. This is 1,30,000. 1,30,000. Okay. First. And then only I will write first current assets only. And then B are bills receivable. Receivables. You can put this way or that way. December 22, 23, you can put 23, 22. Any way you can put, no issues. Okay, I'll put first this last one. Okay, then bills receivable, 8,000. So for this, 10,000. Okay. Got the point? So I have written this. I have written this. Then prepaid expenses. Prepaid. Okay, prepaid expenses. What is that? 1,500. 1,000. Okay. 1,500. 1,000. Okay. Outstanding expense. This is current liability. Current asset stock. 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 1,70,000. 1,80,000. On the point? So it's very clear. So just tabulate it correctly. So just first total it up. Let's find out. And then current assets, okay. And then investment in government securities. It is a current asset. So government security is 30,000 a year. Okay. This is total current assets for this year. So okay. 1,50,000, 8,000, 1,500, 1,70,000, 30,000. Okay. Just okay. Then this total current assets. Okay. Now current liabilities. Okay. Now we have taken current liabilities 80,000. Creditors, Sunday creditors 80,000. Okay. Sunday credit 80,000. This is 70,000. On the point. So are you following with me? So you have to segregate the assets, current liabilities, because we got to short term of the nature is taking place. But I already told you last first session, but it is between current, non-current, non-current to current, current to non-current. It's the same, it will not be the same category. I'll explain it later on. Okay. So now it is there. Sunday creditors, okay, 80,000, 80,000, 70,000. Okay. And then bills payable. Bills payable. What are the bills payable? 5,000, 7,000. Okay. 5,000, 7,000. Okay. So I'll run like this. This I've done it also. This I've done it also. Then outstanding expenses. Outstanding expenses 6,500. This is 5,000. Okay. Got the point? So this is the total. Okay. 80,000, 5,600, 70,000, 7,500. So that's just total it up. You just total it up, it comes to around 3,58,500. Okay. This is the thing that you are getting it. Okay. Then here, then 1,30,000, 10, 10,000, 1,000, 1,80,000. So it comes around 3,21,000. Okay. What are current liabilities? Just find out. So 91,500. This is 82,000. So now what I'm saying is the current assets and current liabilities. Current assets minus current liabilities is equal to net working capital. You got the point? I already told you net working capital is not a big thing. It is only your margin money from long-term sources. Please understand this. It's not the big term, net working capital. Net working capital is nothing but your margin money brought in by you, either from long-term by equity or from even sometimes even some banks are giving term loans to build up current assets, because that is where your margin, your part lies. Okay. So NWC is nothing but liquid surplus, margin brought in by you by way of equity or sometimes long-term sources like term loan, etc. Some of the banks, we have also sanctioned some term loan to build up current assets. But there is a continuous loss when this helpless. Sometimes we help the customers by sanctioning term loans purely to buy stocks and books. Okay, so these are the things. So here, in this case, we are just minus. This is, let us say, current liabilities here. This is current liability. This is current asset. So A, B. So now I have to find out. So I just rub it off. So you just take it. You have noted it, I think so. So here NWC. What is that? Net working capital, current assets minus current liabilities. So 3,15,500. So minus 9,500. How much you are getting it? How much you are getting it? 2 lakh 0. How much is it? 2,68,000. 2,68,000. Okay. This is net working capital plus, because when current assets is exceeding current liabilities, you are brought in your money to build current assets in excess of current liabilities. What happens is 3,15,500 is the total current assets. You understand? It was financed to the extent of 91,500 by other means, by other lendings. Okay, so these are the other funding pattern by from other sources other than bank credit, other than your own contribution. So 3,15,500 total assets you bought it, of which 91,500 is taken care of by these three: syndicator, BP, or outstanding expenses. This all postponed expenditure, etc. So it was taken care of by 91,500. To the then balance, what the balance is? 2,68,000. 2,68,000. It is being funded by you. Please understand this. It is being funded by you. As a proprietor, you brought in money. As a proprietor, you bought term loan from other banks to build up current assets. So it is your margin or liquid surplus, whatever you call it. Okay. So like this, in this case, what is that? In this case, 2,39,000. Okay. 2,39,000. Okay. So last year you brought 2,13,000. This year you total outstanding as you bought in by 2,69,000. So what is the network you have bought in? What is the difference you bought in from year to year? Already 2,13,000. Already you put money. Already you put 2,13,000, but it has gone up to 2,68,000. Okay, 2,68,000. So what is the additional amount you put? 29,000. Got the point? So you brought additionally 29,000 this year. Got the point? So already you bought 2,39,000. This has increased. Your margin has increased from 2,39,000 to 2,68,000. That means 29,000 you brought this year, my friend. Then you got the point. It becomes 2,68,000. So how it will be figuring? So this 29,000 increase in current assets, because you brought the money, you purchase more stock, let us say. Because you most additionally, besides 2,29,000 already you brought in, already stocks are lying. Now additionally you bought another 29,000, that become 2,60,000. So to 29,000 you brought in extra this year. So the current assets have increased. Current assets has increased. When current assets had increased, it is a use of fund. When current assets increased, it is a use. Got the point? Very simple. Don't confuse. I don't want to put all this minus, decrease, increase, decrease. No need. No need. Simply, I'm just telling you. Even exam also you can do it. When business people can easily learn it. So you understand now? Now because 29,000 already 2,13,000 you bought it from your own sources. Now this time this stood at this year is stood at 2,69,000. How much you have bought in additionally? 29,000. Where the 29 is lying? 29 is lying here. Where the 29 is lying here? Here. When the current assets increased to the extent of 29,000, it is a use. Got the point? So offset, what is the offset? It is a use. What is the source? Equity or term loan, long term. So already told you in the first session, introductory section, transaction between current, non-current. Got the point? So how the funds flow will appear? How the funds flow will appear? I just put it like this: funds flow statement. Okay, how it will appear? I just told you. So it's very easy. So you can understand very easily. It's nothing complicated. I already told you. It is very easy. So how it appears? This is use. So the two columns are there. One is source, use, or application. Okay. So 29,000 is a use. This is bought in by you. Where the source? Your equity, capital, or term loan, whatever you call 29,000. Here tallied. Okay. Any doubts? So I hope you got the point from me. So try to do it this way. Don't put the plus, minus, decrease, increase. It will be confusing some because this is all assess will be you can put plus and minus. When it comes to liability, it's ulta. Because without understanding, you are just working out. Just drop it. Just forget about it. Take this from me. Take this from me. This is 29,000. This is the increase brought in by you. Find out the network capital. Find the network capital. If it's say this network is increasing, you have brought the money. If network is decreasing, you have taken the money out, then it is a source. In this case, you have brought in the money to build up current assets. So it is a use because you have brought at 29 to the extent of 29,000, you have brought additional stocks. When you buy additional stocks, when you buy additional current assets, it is a use. Because when you buy, you outflow. When you buy, funds is outflowing. So 29,000 use. Where it comes from? You brought money. You brought money, no. Long-term sources. So transaction between current, non-current, fulfilled. So I hope you got the point from me. So we'll be meeting in other sessions. Then the next step, how do you have to work it out, and how to find the funds flow, and then how to read the funds flow. These are all things coming up next sessions. Watch with me closely, carefully, and subscribe to my channel. I think it will be a great blessing to you. I'm sure about it. There's nothing to worry. Take care. Thank you so much.